Central banks pull the needle out of investors' arm. Bonds fall and yields pop around the world. And tech stocks move the NASDAQ lower. More about all of these when we start the show.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim, and this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market chopped erratically this week. We ended up with a downward bias as the tech stocks led the NASDAQ to the downside. This market had been moved up sharply by the NASDAQ stocks, but then those market leaders really started to give it up. We had some pretty good declines from Tesla, Netflix, Google, and a whole assortment of other tech stocks that moved to the downside. We had a lot of them that lost 5 or 6% on the week. Bank stocks actually helped the S&P 500, which overperformed based on the fact that the Fed came out and gave their blessings to the recent stress test, and buybacks and dividends announcements went up, and the bank stocks had a big jump to the upside and mostly held on to a lot of those gains. So we had definitely a switch as the NASDAQ really started to underperform, and the broader market still held up pretty well. S&P 500 and the Dow fractionally lower on the week, no big deal. Russell about unchanged as it had a huge rebound day in the middle of some wide chop, and the NASDAQ really had some wide chop. Amazing how it can move 80 or 100, 120 points in either direction really easily, and the NASDAQ down some 2.5% on the week. So overall, bad week on the NASDAQ, and our members are going to see that there are breakdowns in the NASDAQ short-term charts, which are certainly giving warnings. The bond market, that moved to the downside as the central banks had around the world talked about withdrawing stimulus. We heard that from hawkish talk out of Draghi and from the ECB, who said that he thought inflation was about to rebound in some strong way. Carney from the Bank of England similarly said that the time may be coming for them to withdraw stimulus, and Yellen and a whole host of Fed heads out there talking quite hawkishly about interest rates, and that caused the bond market to turn weak. 30-year bonds moved down 2.5 points, and they have come down to some danger area, we'll call it, as there has been a big reversal in the bond market to the downside. In fact, the 10 years and our work have a breakdown. We saw yields move from 2.71 up to about 2.83 on the 10 years, a pretty good 12 basis point jump. So bond market really turning weak, and that's really a tone change, because for so many years the bonds have been inversely correlated to the stock market, and they never really were leaders for a long period of time. The big up moves came in the bond market in a flight to safety when the stocks broke, and then the bonds, pretty much in a bear market, have managed to just kind of move in a small upward pattern for some months in here, but now are really giving signs that that is over with, and this central bank action is going to bring more weakness in the bond market. When the U.S. bonds get weak, that usually would be good for the dollar, but the dollar had a big downside week, and that's in line with our negative analysis on the dollar. And the reason for that is because Well, they believe that our Fed might increase interest rates another quarter basis point, but there's a good possibility that England and Europe and even Japan will get on board with some bigger increases. So money is flowing out of the US dollar, and also that's responsible for outflows in stocks that are causing this weakness. So central banks threaten draining, and the currencies reacting, and it certainly does appear like U.S. denominated assets are more for sale than they have been before, and we're seeing that show up in this stock market, which has certainly a choppy look to it. Gold moved to the downside, some $15. Now this is while the dollar had a bad downside break. This is really a very bad underperformance, certainly relative strength-wise, because normally when the dollar has a big downside move, you'll get a good upside move in gold. It's not perfectly inversely correlated, but we saw a lot of weakness in gold relative to this dollar, and that may not be a good sign for gold either. Silver down about 7 cents on the week. Overall, poor performance there, and especially when you compare that to copper, which is getting a big lift, and also iron ore bouncing. So copper looking much better, the dollar looking much weaker. You would expect silver to be up on the week, but it was down. So some real weird action going on there, and it's worth pegging to see if we get any breakdowns here in the gold and silver market. They haven't quite done that yet, but it's certainly worth watching. Oil has 5 days in a row to the upside, up $2.40 on the week approximately, and that's based on a shipping mogul coming out and saying that, well, he's well in touch with the markets, because when you think about oil, a lot of oil is stored in tankers that are floating around the seas, so he would have a good handle on it, and he said the glut is ending. And if that's the case, well, that's good for oil, and we saw oil market move to the upside pretty good. So nice upside move there in oil on the week. We think it's getting up to some resistance, and again, our members will see our analysis on that in our member version of our short-term view coming later on Friday. So I've been talking about the stock market and a correction coming now for well over a month, even close to 2 months. So the market's basically, for the last 5 weeks, just chopped sideways. Not a lot going on there at all, in a relatively tight range, some 35 points in the S&P 500. I produced a video back about some 6 weeks ago that I thought Dow 2,000-point correction was coming. If you want to become a level 1 member, you'll get that video for free. So just go to the askSlim site and become a level 1 member, and you can watch that video. It does a great job of showing how often corrections come and what the depth of them are, and I think that it's really worth a peek. I think you'll learn a ton out of it. So become a level 1 member if you're not, and go watch that. So basically, talking about the correction, I think the top is in, and there are many indications out there of tops. When you look at the market leaders that were the NASDAQ stocks, they're no longer doing it. As a matter of fact, quite a number of them are on the worst of the week list because they have turned so much weaker. So, and there are breakdowns in the NASDAQ charts, certainly on the short-term basis. So I think the next 4 to 8 weeks offer a significant downside risk for what I would call a correction. Now, a lot of people say corrections are 10% or more. I just label them when they go down what is somewhere between the average correction or a little bit more, which is between 5.5% and about 8.5% on the downside. That is in the norm. And if you fall about 9%, you're going to get that 2%, 2,000 points down in the Dow. The nature of the markets, and I get a lot of emails and tweets about this because lot of traders out there want the market to fall, and they say, well, you know, the market is not, you know, buyers keep coming in, the market can't stay down. Well, the nature of markets that decline are that the bulls fight. They fight back. They're waiting for their opportunities to buy and buy the dips. And the bears are so nervous that they cover their shorts all of the time. So you get the declines and then you get the bounces back, and that's what we're seeing in this market, this choppy market. Also, the nature of this of a market that goes into correction is that there are air pockets on the downside, and we've actually seen a couple of those recently in the NASDAQ, where we had a 3% downside day in the NASDAQ, which is, you know, a huge down day, 150, 160 points to the downside, is a big move, and we're starting to see the market have a propensity for those kind of downside moves. Look for high volatility over this next weeks, and I actually think that correction is here, and that we're likely to see some sizable moves down well into August. Now again, I'm using the word correction. I actually don't think that this is a bear market yet. And I actually think that somewhere down the line here towards the fall time, we're going to get the Republicans getting things in line and getting things done. And after this correction here, we're likely to see another upward spike if that happens. But then I think there's a real bear market coming after that. But we have to see how that all shapes up. So Republicans fail at it all, well, the bear market's going to be here. And if they get in line and get things done, like I think they're going to force it through, then I think when this correction's over sometime in August, that we're going to start to see the markets, you know, have a pretty good rebound again. Let's focus now on the coming decline, which I think is at hand. All right, so every single week what we do is we look at our 60-minute chart of the S&P 500, in which we discuss the background news, the things that move markets, and we look at the 24-hour chart. The gray area is the area that is the overnight trading, and the area that is white is the pit trading, as us old pit traders would say. So you can see that chart in here, and you can see it's obvious it was a pretty choppy week. You can see the big declines right in here where the health care vote was postponed, and you got that drop right in here. And here's where the tech stocks got absolutely annihilated. Overall, a downward bias week, as you could see, with this big update right in here in the middle where the Russell absolutely exploded and essentially overperformed in the week. So on Monday, we had Italy come out, and they said they saved 2 banks, and that actually got the European markets bouncing to the upside, but the U.S. market couldn't hold the gain. You can see that as it moves over. There was a little flash crash, a 1 minute 12-point drop overnight in gold, and gold could never really recover from that. They're saying it was a fat thumb mistake, but you know, you got to wonder about that. So platinum and silver followed downward, and Fed Williams comes out and he says that despite low inflation, more Fed hikes are likely to come. Durable good orders came out quite slow, but that did not certainly help the bond market overall this week. GM warns that their industry is slowing down. I've been warning about that for weeks and weeks and weeks, and stocks essentially chop and drop. On Tuesday, lots of news. I mean, a lot of stuff coming out in here. World markets were weaker starting out the day. It was all based on Draghi coming out and said that the inflation was coming. The euro exploded to the upside. Dollar cracks, and that hurt the bond market. Fed head Williams comes out and warns. He says longer-term growth is weaker. And then Williams Fisher comes out and warns about complacency on asset prices. Yellen, who spoke also during the week, says rate hikes are coming. So they're all over the place. as far as that goes. So looking for weaker growth, and at the same time seeing slowdowns out of GM and slowdowns out of durable goods, and they're they say they're data dependent, but then they're not really data dependent, are they? Google gets a $2.7 billion fine from the EU on antitrust, and that sends Google down, and Google never really recovers much for the week on that. And of course, McConnell postponed the healthcare vote there. World markets were mostly lower also on Wednesday, but you could see what happened. They got a recovery overnight. The Bank of England said that they're going to remove the stimulus, and the dollar and the euro chopped, but the dollar was really weak. Bonds down a full point overnight. They tried to rally back, but they chopped and stayed down essentially. Index futures started to rebound and had a very good day. As a matter of fact, you could see this was a big down day in there, but the market recovered even more of that on Wednesday, and there was steady buying all day long. On Thursday, not much going on in the world markets. We moved closer to the holiday day. Nobody thought a lot was going on, right? But there's this tightening chorus going on all over the world, and the U.S. bond markets cracked to the downside again, and stocks are focusing on interest rates again. U.S. GDP revised up to a fantastic 1.4%, and the bank stocks got a pop on the stress test news that the Fed will, bless the buybacks and dividends, and more news came out on that, and banks popped. Didn't matter because the techs cracked, and NASDAQ fell 105, and you could see that big downside day. And here on Friday, as we're coming into the last hour of the day, world stock markets did basically nothing, except Japan had a little bit of a downtick. A very slow market here, as the S&P 500 has been up 6-7 throughout the entire day. ES up about $4 and pretty much hanging there all day long, and oil having its fifth day up. So not a lot you could see going on here on Friday, and I gotta tell you, there is a lot of risk I see in here when you see this market and this kind of a flag forming right in here. I think we're in this corrective period, and you get these days where you just kind of move sideways with a slight upward bias after big down days, and then the risk is that they move down again. Here is our calendar for the coming week. You can see there that there are no earnings reports coming out at all. It's going to be a very slow day on Monday. It doesn't mean they can't move, but there's not going to be much volume. Tuesday's closed, and then you could see Wednesday, Thursday, and Friday some pretty good news coming out. The FOMC minutes, which everybody's going to watch. Normally the markets move on that. This is the ADP report, which is the private sector employment numbers, and lately that has not been moving the market much. And then the employment situation then comes out on Friday. So that's you can see not no earnings that are really going to move very much, but then these news items can certainly move the markets. And I got a feeling Wednesday, Thursday, Friday volatility is really going to pick up when we get back from the holiday. So that is our opening segment as we looked at the background news and the earnings calendar for the coming week, which is nothing, and the economic events, which are going to move markets. And we'll be right back with the best and worst of the week. All right, what we do every week is we look at the best stocks and the worst stocks for the week. Normally what we look at is the cyclical analysis. For those of you that are new, my style of analysis is called cycle analysis or cyclical analysis. It's based on the work of J.M. Hurst in a book that he published late in the late 60s, early 70s, called Profit Magic of Stock Transaction Timing. And I have essentially taken that work and it's evolved over more than 40 years for me into my own, we'll say, version of the work. So every week you see me bring the cycle analysis. And it essentially is a visual depiction, an observational way to analyze the markets, where we're looking at money flows, but in a visual way. It's the rhythms of the markets. And there are repeating rhythms in the markets, and you will see that as I look at these charts, and some of these market rhythms are actually very clear. So these charts that I do, you see that there will be notes on there, there'll be cycle analysis, there'll be forecasts, and that's something that my assistant and I do on a daily basis. So most of the work that you see here is done manually. We do it on 400 symbols or so. And our chart subscribers get all of our work on the 80 most active, best traded symbols and futures and stocks and ETFs. So let's start out with the best of the week. The first thing we're going to look at is Sears. Now, I have loved to hate this stock. Of course, I've been the same thing on JCPenney. Believing JCPenney is going BK, and that Sears was certainly a question, and I thought it was going sub $10, and now the pattern in here is getting interesting on the long side. How do you like that? I can actually turn bullish on a stock that's bearish. So take a look here as we look at Sears SHLD. So you can see in here a good model for the cycle analysis, in that there is a downtrend and these are the cycle brackets right over there. And when you have higher, lower highs and lower lows, you have a downward cycle rhythm that you see right in here. And you can see how these cycles follow this right in here, with these measuring the important lows. So there was an important low due right over here, and guess what? You got it, and you got a big uptick here. 28% on the week. How could a stock like this have that kind of a move? Well, it's certainly short covering, because you get a lot of that, but this cycle now has turned up, and you can see our upward projection right over here. Some analyst came out and he said the asset value for Sears is $90 a share. Well, this guy is smoking some dope. But certainly when I look at this, I could guess it could get to 14, or I could guess it could get to 18, but not $90. But in the meantime, it's moved up from $6.50 to $9, and I think there's more to come. So this stock up 28% on the week, SHLD. And I think that if you get a downtick in here, you buy it, because I think it's going to, if you could buy it at $8, I think it's going to go over 12 or 14. You can make 50-60% on your money in this one, because this is a very nice pattern. We call this a base, a cyclical base. What's a base? Well, you could see the low here at 5.5, and this low here about 640 something. So this is a higher bottom right in here. It says that this downward trend right here is now changing, because you now are establishing a upward trend, a higher bottom right in here, and there you could see. So we projected upward right in here, and like I said, I could see it back at 14 again. So Sears, a great week, up 28%. Let's stay in retail. Retail had a pretty good week this week. Nike's one that I'm not happy about. I mean, I got to tell you, right now I'm clueless on this, because you can see our projection and what actually happened. We were bearish on here, and we thought it was going to go down for another few weeks. As a matter of fact, we have a short biased setup in there, because it's a high probability that it would continue down to about 49 over the next month. But then news comes out, and this stock screams. First of all, the earnings were pretty good. And second of all, there's a test going to go on where Nike's shoes are going to be sold on Amazon. And man, do investors ever like that. Up 11% on the day. Puts it up about the same thing, about 10% on the week. And a very, very good looking pattern in there. There's no sense in being negative in there anymore. I'm just going to wait for a little bit of a pullback in here and pull my setup, my short side, out of there. Definitely now gets me confused, and sometimes news does that, because that was a very early bottom, and clearly a bottom in that pattern. We'll stay in retail, and we'll look at Lulu. and here is Lululemon. Now you could see in here the importance of the level that it's at right now. So it moves up this week as the CEO buys 100,000 more shares. Well, there is a vote of confidence for sure, right? So it moves up to this resistance zone right over here, which is at about, top of the zone is about 60. You can also see what we call a VTL. It's a valid trend line based on cycle analysis. It connects two major cycle peaks or the most obvious cycle peaks, and you can see the importance of it as it comes down right over here. If it gets through that level, it's very easily going to pop up here to about 63 or 4, and then it will be confirmed really that this rising phase, which we're in, and you can see it's right on time. Here's the big pattern right in here, very clear. You can see that, and in this rising phase, and so important level right over here as it has a solid gain, 7% on the week. Also in retail, Staples gets taken over. They said that they were shopping something, so some firm is grabbing them at 10 bucks a share. It was trading up around near there, so no big deal. It's up about 8% on the week, and that stock will come out of our list of stocks that we follow. KB Home up about 7% on the week. Now, Lennar, Pulte Home, and Toll Brothers, all of them having stalling patterns on, and with interest rates now starting to move up, I think these stocks are about to stall. So they've had good gains, they're near highs, and I think that you got to watch for the housing, the home builders to start to roll over here. President of the United States, Donald Trump, has been talking again about steel and about tariffs and protecting the steel companies. And we've had a pop in iron ore prices and also in copper. It's all related. And the steel stocks are doing better. Schnitzer up 5%, Steel Dynamics up 7.5%. Good weeks for them. And U.S. Steel up a measly 0.8% on the week. So I'm going to bring these charts up so you can get an idea of the movement in here, because basically I'm focusing in on U.S. Steel, which has been left behind, kind of a laggard in here. Here is Schnitzer Steel, which had the 5% gain on the week on the upside. You could see that. It's a strong move now based on cyclicality. You can see in here that that's pretty much spot on. When you see these two blue spikes right over there, that is the time frame that we projected the low to come. And you can see the low came, well, right about there, right? And then it started to move up, and you can see the cycles right in here. So this is the ideal. This is DBB, the base metals. We overlay that on here. And you can see each of these lows as they came, well, right on time, right? And then this low right over here, pretty close. And then it moves up. And this stock had an extraordinary movement here on the upside, and big gain, and I think that it'll probably pull back a little bit, but then probably stay strong overall. Steel Dynamics, now look at this one. This has been just in this sideways chop for 4 months, or longer. Now you get this big upside week. This is actually right over here what we call a morning star right in here. And that's a bullish occurrence. Steel Dynamics looks like it's just turning up, and that all of this is a big consolidation. Now, when I say consolidation, I mean like it's a big flag. So you see the shooting star there that's set to high? So here's your flag, big major flag that's forming right in there. So if it gets above that downtrend level right over there, it's liable to spike on the upside. So what do we want to do? We want to, well, put an alert somewhere right over here. Let's just put it at about 36.90 or so. I'm just going to right click on there. I'm going to say create alert. And I'm going to say at or above, and I'm going to say flag breakout, and it will alert me that it had that flag breakout, and I'm just going to create that alert right there. So alert created. You can see that little arrow on the right there, and it'll tell me when it's breaking out. So that's a good pattern. Now U.S. Steel is lagging in here. Look at this. Here's that green zone. This has our colored phasing in here. So you can see what happens when you get into these rising phases, that you get a nice upward move. Let me get this pointer up here for you to see. Here's your rising phase right in here. See this one right here. See this one right in here. See how they nicely work. And when you get into the corrective phases, here, here, and here. Now note, you got the rising phase here and it broke down. Once it broke underneath that last low, it turned bearish, and look what you got. So that's the value of cycle analysis. Look what's going on now. We're getting this rising phase, but it's way underperforming. Maybe analysts don't love this one and they consider that it has a lot of risk in here, but even in that case, I think this one's going to catch on. We're looking for at least a move to the 38%, which is $27.50. Pretty good gain. That would be about a 25% gain in here over coming weeks. And believe me, if we get some continued downward chop or downward movement in this market, they're going to look where to rotate into, and U.S. Steel is likely to be one of those stocks. So here we look at a stock that's lagging, and I actually think it is going to come to life in there. We talked about the bank stocks and the Fed and the stress test, and that the banks have and now talked about more buybacks and raising dividends, and banks had a big upside jump on the move. Bank of America up 6%, Citigroup up 6%, JP Morgan up 5%, Wells Fargo up 5%, and all of them in pretty strong patterns. Let's take a quick look in here. But the question is, can they keep going? And if the market goes in the correction, can they avoid rolling over? Note the Bank of America pattern in here. As the low came right on time, you can see that, and then moved up into this rising phase, but there's head and shoulders look to it. So that makes me a little bit nervous when you look at that one. When you look at Citigroup, you can see this one much better. As a matter of fact, it moves into the zone of the Fibonacci targets, and that one's still looking like it's okay, but you know, overall we're a little worried about the stock market weakness coming and these things turning down again, because Goldman Sachs has really actually had a hard time holding the gain, as Morgan Stanley has. Now here is JP Morgan. Now this one overall, we did not even expect it to get this high, because it's actually a overall topping pattern. You see, this is a lower low right over here. It says that you're not likely, only about 1 in 5 times do you test the high when you get that, and we're getting up close to it. So this is one of those 1 in 5 times, but we would expect it to roll over. As you could see how we have it drawn in here and projected. And this is in a tough spot for JP Morgan. Wells Fargo has been a real dog relative to this group because of their issues on account openings. And here you could see it moves up into the resistance zone and then starts to reject already. So we don't think Wells Fargo has a lot more on the upside anyway. So that's a look at the best of the week, and you can see some pretty good movers in there. Overall, I think the best trade in there is Sears, and we get a little pullback, you get a pretty good buying opportunity. Boy, that feels weird to say. All right, we'll be right back with the worst of the week. All right, for the worst of the week, we're going to jump into a lot of tech stocks. Like I said, the tech stocks have been moving the market lower, and that has been, you know, with the NASDAQ leading, but the rest of the market certainly not having any kind of huge move to the downside. You know, maybe for a while it's going to be just these tech stocks that are going to be the ones. Everybody's looking for bounce backs in them, and you know, these patterns are so bad in some of them that I think that they may try to bounce, but I don't think they'll be able to hold very much. The worst stock of the week, it's been a stock that's been hot, and that's AMD, and it's been hot because they have a chip that the cryptocurrency miners use. And now NVIDIA is coming out, or has come out, with a competing chip. And though NVIDIA's pattern isn't all that great either, AMD's pattern has gotten a lot worse. Here you could see it makes a top pattern below the last high. You can see the big head and shoulders forming in there. And because cycles form head and shoulders, as you could see right in here, so this decline was this right shoulder, and this whole cycle was the head, and then this rally is the right shoulder. So this was left shoulder, head, and right shoulder. And if it turns down again and breaks the neckline, it could be in a lot of trouble. So that's a pretty good peak that you see in there. It's down 13% on the week, and not a pretty sight. Western Digital gets, they lower their guidance, they fall, but Seagate, which is like a cousin to that company, has a worse time of it. This is I wanted to put this up because this is a great example of a cycle violation. Remember, I showed you when a cycle violates that it falls for all the rest of the period in that cycle. So in other words, you know, here's a rally and then hardly declining, and a rally and then hardly declining, and a rally, and then, well, it declines pretty hard right in here. See that? So there's your uptrend right in there. And then you get into this rally phase, and look what you get. You get nothing, a sideways flag that forms in here, right in here, and then it breaks underneath that low. So the low that was formed at the bottom of this cycle, that says it's going to decline all the way out here into September. So this stock, a major breakdown, and I would say that if it gets a pop in there, this stock is a sale. So that's a look at Seagate. The Triple D and Stratasys, some analysts came out and said that the Stratasys valuations are just out of line of the real fundamentals. And both of these stocks got big breaks. Triple D down 12% on the week. You can see in here this big flag, and we caught this breakout in a beautiful way. I know a lot of people that follow us caught that. And now it runs right up into this fib confluence right up over there and then rolls over. So we have a declining period in here down into August. And remember, we're looking for the market to correct into August. And that declining period right there should see it continue to chop on the way down. But we actually believe that when this period is over with in here, we're going to get this to finish and this to start. And that's the projection you can see right in there. So we think it's going to move up again and challenge that resistance zone once it finishes this corrective period right in here. Stratasys, SSYS, down also, some 10% on the week. And this one you could see turning down also. And I haven't completed the cycle analysis you can see in here, but coming down right in here, this low is at the end of July right there. Here's the timing right up here. So another 3-4 weeks right in here coming down, and then we think it turns up again too. So we think these 3D stocks are correcting and going to give a good opportunity on the upside after this correction is over. July and August, that's how they line up. MGM moves to the downside, and a bull on this stock has turned cautious. Now you could see the cyclic action in here as it moved up nicely. Big, long, wide cycles in there, kind of unusually large, but you can see the clarity in them. And then you get this engulfing pattern right over here, which really says that there's a top, and this goes out to September before we see a low in here. So this looks like a big top. People that are long-term holders in this stock, I actually think that it's worth selling because this is a big breakdown from a big move with a lot of time to go before the expected bottom. So MGM gets a big move to the downside. So now we're going to spend some time in the tech stocks because I've talked a lot about them, and I want to show you some of the weak patterns that are starting to form in here and that I think are going to continue to weigh on the NASDAQ and on the stock market in this coming corrective period, or that I think has already started. So we're going to jump into the first one you're going to see in here, and that's Tesla. TSLA. Interesting comments out of China this week that China is actually building batteries, and you know how big the Gigafactory is supposed to be for Tesla? Well, China has a factory that's 3 times the size and can produce 4 or 5 times the batteries that Tesla is producing, and they're producing it for other makers. So Tesla has got a pattern in here that I got to say is worrisome, and it's coming from the very perfect spot for it. Everybody's really bullish, you know, Tesla is the next $1,000 stock because they're the alternative energy tech company of the future besides their cars and batteries and solar roofs and all that stuff. that might be the case, but I think they're done for now, and you're going to get a better opportunity to make the investment for it to go to 1,000. Here is Tesla right over here, and you could see the engulfing pattern right over here, which is normally the top on a cycle. When you see that, it's usually trouble. You could see it engulfed right there, and it did it right around these fib confluences, and that's a place where you'd expect it to start to get some resistance. So, I think it's reasonable for this stock to pull down to this 23.6% up around down around 320. You could see our time frame in here is into September right over here. So I think this stock is going to continue to struggle here and give up some 30 to 50 points on the downside over the coming months in Tesla. So you can see it looks in there like it is topping. Now we'll take a look at some other tech stocks in here that I think are also topped. Google, GOOGL. That stock in here, you could see a compound top that's formed in here, also right in the fib extension numbers. So there's some value when you look at those fib extensions. Of course, on key stocks, our chart subscribers get those on their charts. So you could see it's pulled back now. It's got an evening star, an engulfing pattern right there in the fib extensions, and this corrective period right in here. You can see there's what we call harmonics, cycle harmonics in here, or harmonic family, where we had this rally and then this sell-off and then this rally. So that's right here and here and here, and it turned down again. So this goes into August, again into August to correct, and we think that this time period right in here is going to be on the downside, because this actually got lower than this low right here. So this is everything about what we're seeing in these tech stocks really looks like trouble in here. So Google moves to the downside. They had that $2.7 billion fine, which is nothing to this company really, but they had some negative reaction to that. Take a look at Netflix, NFLX, whose costs are going up, and Facebook is coming out with their own unique material. This is a really bad chart. Now it's in a support zone right over here, but we think that this cycle's low support is going to get challenged around 138, and it's already moved down pretty significantly from up here around 167. So this time period right in here again points into August. So there's a lot of reasons why we think there's a decline into August, and this one is really a pretty bad pattern when you look at that. So 5% down on the week. Let's take a look at the daily chart just so you can see what's going on in here for the shorter term pattern. I'm going to move this out to a 2-year daily and then come in so we get these cycles to align properly. Right here, there you go. So now what's going on in here is that you had this big decline right in here, and you broke under that cycle low. So that was a warning. Interestingly, when you came down and had the rally, you rallied almost right back up to that spot over there, and you did this kind of bear flag or wedge and then broke down right over here. This points to a decline in July right over here, and then another rally, and then probably a decline into August. So Netflix to us is in a lot of trouble, and we could see this stock getting down to that support area on this weekly chart on the left at about 138. That would be our downside target, our best downside target. And we think it could do worse than that, but this downtrend that it's in, we think, is going to continue. So that's a look at Netflix, down about 5% on the week. One more kind of anecdotal piece that I want to bring you is Macys. I talked about Sears turning up, and we've had these other retail stocks turning up. Macys is in a horrible pattern, and I think it's going to move down under 20. I went shopping at Macys yesterday, and I have never seen a bigger assortment of ugly clothes in any store as I saw in Macys, and the whole store is on sale. Everything is on sale. How are they ever going to get any margins? So everything on sale, the ugliest clothes I've ever seen. I think Macys going to go under 20. That's my little anecdotal piece on Macys, and we're going to be right back as I bring you our short-term view for the coming week. All right, short-term view for the coming week. Do you like what you've seen here? Do you like all the analysis that I do? And I bring 9 videos, 9 different categories of videos every single week. We put up 5 videos for our members every single week, and then we do analysis on 80 of the best traded symbols, 24 futures, plus 56 ETFs. And stocks, the best ones that we trade in options. And you don't really need any more stocks in your trading universe or futures than the ones that we look at. You want to look at all of our videos and take a look at our rankings and trade setups, and just fantastic amount of information every single week. Take a free peek. Well, not quite free, because you can look at everything that we put in there for half price for $43. Everybody wants free peeks, right? But so I have that in my brain, but this is an amazing $43 half price to be able to watch more than 250 videos that we've done with amazing amount of analysis, and also our rankings and setups. Now, if you want the free peek, become a level 1 member, and then you will get our special videos that we posted in there, and whole new things that are coming up for level 1 members over the next month or two. And you'll be able to see that video that I did that talks about the corrections and how regular they are, how deep they come, how do you know when they're coming, and the one that I think is at hand right now. Make sure that you go to YouTube, if you watch this on YouTube, and give us a thumbs up and put some comments on there, and follow us on YouTube also. All right, so now let's get to our short-term view for the coming week. Last week, what I said was that I thought the market would try to rally early and fail, and that the risks were really mounting, and that it would be, if anything, a down week, and that in the next couple of weeks there was a lot of chance that the market would move down pretty significantly. So we're going to look here at the S&P 500 and see what it did, and then look at our projection for the coming week. So here is that chart for the S&P 500. So we thought that it would try to rally early in the week and then fail and turn down on the week. Here is Monday, that attempted rally, and here's the week that you could see right in here. So it's doing, it gapped up a little bit on Friday, and it's having kind of a nothing day there on Friday, up a little bit relative to these moves. But you can see in here the patterns. Now, I really laid it out for you clearly in here. Here is that dotted pattern, is this big one right in here. So this is a declining week that we're coming into. Now, the smaller pattern right in here looks like this. So here's the rally and the sell-off, the rally and the sell-off. Here's how it shapes up here. The rally and the sell-off, the rally that fails fast, and the sell-off. And this has about 5 more days in it right in here on the downside. This points to a decline next week and into the following week, and it can be pretty severe. So we think that that we've been in this period of risk going up, and we thought it would be a period of extreme risk. And you could see the changing nature of the market. Look at the size of the down days, 1, 2, 3, right over here, where there is a lot of selling coming in, and we think that we're going to keep seeing that, and that actually we could get into a period of more free falls. We would say that the S&P 500 is likely to come down and test the 2400 level or lower in here in the coming week. Very easily could get to this area of 2388, which is this minor 61.8%, and the 89-day moving average. A lot of these declines approach the 89-day. You can see here, and I think coming up right over here. So best level that I see happening in the next week is 2388 into the following week. So we're going to call this a down week. The NASDAQ, we think, can get down to some 5,500 with a target actually on the head and shoulders at 5,400 on the downside. So S&P 500, a good amount of risk out there. Hope you really did enjoy this show, and that there was lots of great information for you. You learned something about the way we analyze markets and about the value of cyclical analysis. You can look forward to a workshop that I'm coming out with in coming months on cyclical analysis. And let me know if you have any questions. You can write me emails. Send me an email, slim@askSlim.com, and I'll send you that special link, half-price link, $43 for a month, or become a level 1 member and take a look at some of our stuff at no cost to you whatsoever. That's it for the show. I want you to be safe because, man, it is crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm going to do a city show.